Today I answer the question, what is the workers' comp experience modifier? The workers' compensation experience modifier goes by different names or phrases depending on who you're speaking to. I call it the mod, but others may call it your X mod, the experience rating factor, the modifier, etc. Regardless of what you call it, the mod is a rating factor found in your workers' comp policy, and it's specifically developed for you. That development, or its promulgation, is done either by the State Workers' Compensation Rating Bureau or by the National Bureau, known as the NCCI, and that's depending on the state you're located and do business in. What does the mod do? The mod is intended to add fairness and balance to the workers' compensation system by charging employers with poor claim experience more than the average, and those employers with fewer claims getting charged less than the average. That's the mod's basic function. How is the mod calculated? The mod is based on 3 of the last 4 years of your payroll and claims data, which are reported each year by your insurance company up to the rating bureau I mentioned just a minute ago. The rating bureau takes that data and runs it through a complex formula to produce the mod, which is expressed numerically, such as 0.82, which would be a credit modifier, or something like 1.22, which would be a debit modifier. How is the mod used in my policy? The mod is a factor that is multiplied against what's known as your standard premium. Your standard premium is the total of premiums for each class code that your policy generates. For example, if your standard premium is $100,000 and your company does a great job with safety and has few claims, then your modifier would be, let's say, a 0.82. Your final premium would be $82,000. Conversely, if your company had problems with claims and not so safe, and you had a mod of 1.22, your premium would be $122,000. This is obviously an oversimplification of how premium is developed because I'm omitting taxes, fees, assessments, other surcharges, and credits. But I'm sure you get the gist of what I'm trying to explain here. These 2 employers started off with the same standard premium of $100,000, but the one with poor claim experience is going to pay $40,000 more than the employer with good claims experience. And that's what I mean by adding fairness and balance to the workers' comp system. Employers with a good safety record will pay less than those employers with a poor safety or claim record. The point I'm getting to is that the mod can be your friend or it can be your foe. It's up to you which it's going to be. So you may be asking yourself, how can I reduce my mod? That's a good question. Reducing your modifier can be achieved by having fewer claims. That's it. Simple. Period. The good news is that claims can be controlled. In fact, in my almost 40 years in the business, I've worked with hundreds of business owners to help them reduce both claim frequency and claim severity, and they've seen their mod reduced. Their workers' compensation premiums go down, as well as their total cost of risk. There is a small catch, and that is it's hard to reduce the mod quickly. As I mentioned earlier, your mod is based on 3 of the prior 4 years of experience. So if you've had bad claims experience from 3 or 4 years ago, that's going to stick with you until they get flushed out of the formula. The point is that it's never too early to start on safety and risk control strategies to reduce claim and claim costs. Another question I often get is, can my mod be wrong? Yes, your mod can be wrong, and the problem is that the rating bureau that develops your mod, your insurance company that uses that mod, and your insurance broker who sells you the policy with that modifier are not responsible for verifying or checking your mod's accuracy. Some proactive insurance brokers who specialize in workers' comp do verify modifiers for their clients, but from my experience, most do not. Typically because they don't know how to, they don't understand how the mod is developed, or they lack the tools and knowledge to actually perform the calculations. In fact, some experts believe that 60 to 70% of mods in all workers' comp policies are wrong, and that's pretty staggering when you think about it. How can you verify that the mod in your policy is correct? There are basically 2 ways you can do that. The first is you can use a consultant who specializes in workers' comp experience mod audits and usually works on a contingency basis. They can look back up to 3 years to find errors and get them corrected on prior policies, which will earn refunds for you. Typically, these consultants work on a contingency basis and take 50% of those refunds you get as their fee. The second way is to work with a broker like me who specializes in workers' comp and can determine the accuracy of your mod as well as look backward to see if you're due a refund. Typically, we do this work for new clients who commit to working with us without a fee or contingency arrangement. We believe that this is part of our value add to a new working relationship. If the mod is correct, you know you're good. If it's not, we work to get it corrected. Here's the bottom line. The workers' comp experience rating modifier has a huge impact on the premium you pay for workers' comp. The safer your work environment, the lower your premiums will be for workers' comp, but more importantly, the fewer claims you have means you'll also have lower soft costs which occur with every claim. In fact, soft costs can be anywhere between 2 to 20 times the actual cost of a claim, according to the Bureau of Labor Statistics. Controlling risk and claims takes commitment, but more importantly, support. Support which I can help you with as part of our Comp Control 360 process. The larger the premium you pay, the more that's at risk. There's no sense in going it alone. Give me a call, drop me an email, let's chat about your mod and your efforts to control the cost of workers' comp inside your company. Like this video? Give it a thumbs up and subscribe for more content on business insurance and risk management. Thanks.